Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hey, everybody, and welcome to the Finovate podcast. Joining me today, we have Alex Harris, co-founder of Fiat Growth and co-founder and GP of Fiat Ventures. Alex, thanks so much for taking the time to chat with me today.
Thanks so much for having me. It's a great honor to be here.
Yeah, well, we got introduced to each other backstage at Finovate Spring, where you were part of a really cool panel, and I'm happy to continue that conversation today. We're going to be looking at, where we are in the fintech ecosystem, kind of like a mid-year review type of thing. Before we get into that, though, can you give us just a quick overview of yourself and where Fiat Growth is coming from?
Happy to. Yeah. So we're a little different than a lot of companies in the space. We and a lot of funds in the space. We started as a consultancy. So focused on growth and building a full stack consultancy for everything that an early stage and later stage company needs to grow. So everything from the MarTech and analytics to full creative go-to-market strategy, partnerships and sales team. I can give the details, but that's at a high level what we do, which really gives us the exposure to do the ultimate due diligence and see who's investable, compare the stories that were being told by companies who are pitching us to see, is this realistic, and help navigate them once we do invest. So that kind of gave life to Fiat Ventures, our venture fund, which is an early stage fintech focused fund that we both do due diligence on through our efforts across the organization, and also support the growth of our portfolio.
Yeah, so you mentioned your early stage. Can you talk a little bit more about what types of companies you typically look at? Are there, obviously early stage, but are there specific types of fintech or specific stages that you really consider to be in your wheelhouse?
Yeah, most definitely. So we look at pre-seed and seed, and we will do some Series A's, especially as a follow-on. Fintech and fintech adjacent is our focus. So, the old line that every company is a fintech, but in a lot of ways, we look for the intersection of fintech and health, fintech and insurance, fintech and climate, fintech and, really how it is becoming the building block of so much of how business gets done. And we focus on those areas.
Yeah, certainly. I think you're right. The interconnectivity of fintech is growing. It's now got a piece of, I think, almost every type of economic initiative you can think of. There's a technical component to it. And this seems like a good transition into kind of the central piece that we want to spend some time talking about today. We're halfway through 2024. There's a lot of different things happening in the geopolitical landscape. There's high inflation rates. There's a lot of different elections taking place this year. There's all sorts of regulatory environments that are shifting. What are you seeing in terms of what is some of the biggest factors that are really affecting the fintech ecosystem right now, either in a positive way or in a negative way?
Yeah, look, ultimately, despite us being at a time of transition right now, we're really at a time when we're getting a second chance, or a third or fourth, whatever generation and wave you think we're in right now. We're at a chance to build sustainable businesses and to build sustainable businesses for the long term. And so we're seeing these macroeconomic factors, persistent inflation, high interest rates that are really holding for longer than I think many of us had imagined. And that has, dried up venture capital. So that is the amount of money pouring into LPs, a lot of venture funds that are holding onto their capital and waiting. A lot of these rounds that have been taking place in venture capital have been helping support existing portfolio companies. And so we're now on the brink of a few things happening. We're seeing interest rates hopefully start to decline. We're seeing, and that's both in the US and globally. And we're seeing that this opportunity ahead of us is to look at businesses the way they should be built early on for the long term. Sustainable economics, building not just growth at all costs and building a large user base and we'll monetize eventually, but how from this early stage do we do that? So you're seeing great companies at all stages. The early stage companies who have built purposefully in the environment that we're in, building more sustainable businesses. And then the companies that have been kept alive by their existing investors, those who have survived and are thriving, are going to be ready for that growth capital and have been, weeded out what companies are going to be the long-term winners in the space. So you have an exciting crop of new companies, and these kind of mid-stage companies have been thoroughly vetted and revamped and ready for growth and to be the next generation of leaders.
Yeah, I think, I've talked to several people who look at the fundraising environment kind of in the 2017, 2018, 2019 timeframe. And looking back on it, you now think that maybe some of the valuations there were a little bit disconnected from reality in terms of the amount of money going in, the number of quote unquote unicorns, which were oh my God, I'm another unicorn. Everybody's got $1 billion valuation. And I think if you look back on it now, you think, well, clearly we potentially overvalued some of those companies as an industry. Do you think that where we're at now is maybe a little bit more realistic? Is this kind of closer to where we should be in terms of giving companies the valuations that they deserve, giving them the funding that they need, but also still kind of putting that lid on things and saying, well, you still have to demonstrate that path to profitability? From my standpoint, it almost seems like this is potentially, it's more difficult in some sense for the founders, of course, but maybe we're in an area of more responsible fintech right now, where the companies who do come out of this are better positioned to be able to go on and really conquer the world. Is that a sentiment that you think you would agree with?
Yeah, I love that. More responsible fintech is a great way to put it. And I think that's more responsible to investors, to the end users of these products, to the key ecosystem players, whether that is a bank or a traditional insurer, whoever it is in the ecosystem, that it's built for long-term success rather than some of these risks of failure. And I think that is the era that we are entering in. It's we saw really things that didn't make sense, both in terms of valuation, but also the growth at all costs, where you have someone who is saying, hey, let's spend $2,000 acquiring a customer that has an LTV of $1,000, something that is any basic understanding of economics would tell you it does not really pencil out and make sense, without a larger plan, of course, to increase that LTV, lower that acquisition cost. There's many of these businesses that were built around hype. We like to say that we are fundamental investors, not momentum investors. And so you would see these companies that would almost kind of like someone is famous for being famous. These companies that are hot because they got a big round, and so they get another big round, and that's just kind of that momentum that snowballs. Instead, you take a hard look at what these businesses are doing, and it really forces you to, in your words, right, be responsible in how you grow, and that's having the impact in bringing valuations down to a more realistic level and forcing companies to grow into those valuations, and really rethink how they're growing and the message that they're sharing with venture capitalists.
Yeah, of course, the downside of all this is that there's going to be a really big decrease in the number of penthouse offices with helicopters landing on the roofs when somebody gets those, $100 million funding rounds, and like, oh my God, we're rich, and
right.
not really thinking about, well, actually, you're going to have to pay that back at some point. You're going to have to end up, it's not a gift, it's a loan. So, and I think you
Yes.
mentioned something else which I just want to follow up on. You talked about this idea that maybe there's kind of a new generation of fintechs coming into the space. Can you expand on that a little bit and talk about what you mean by that? What you're sort of seeing that would indicate that there's kind of this new crop that would indicate a marked shift in terms of the types of companies that we've seen come through the fintech ecosystem?
Yeah. I think it's thinking about the business model from day one. Many people would define a need, come up with a solution, maybe some feature that people would gravitate towards, and they would think, okay, great, let me build a business around this. Let me acquire a wait list. Let me acquire something some large amount of traction that I can sell to get a large amount of venture dollars. Instead, that needs to translate early. Whether revenue needs to be there at that early stage, depending on how early, is can depend. But you need to be able to answer those questions at the early stage of, cool, what happens when we acquire? What happens when we get to this critical mass? What are our plans for taking people along the cycle, not just acquiring top of funnel, but understanding that customer journey, the life cycle of the customer, where there's drop off, where there's opportunity for monetization, and really thinking critically from the beginning. And that's the opportunity that really excites me, is these companies are thinking critically from the beginning rather than doing something well and then having that, oh crap moment, how do we make this a real business? So I think that this is going to be a new generation of more enduring businesses.
Yeah, no, my perception matches up with yours. I think we're seeing, we've always seen, and there's always been room in fintech for a good idea to come through, right? And I certainly hope that is always the case, that somebody with a new technology, they think, this is something which should exist. I'm going to build it so that it does exist. That's always very important. But to your point, we're seeing more kind of businesses now, more people who are looking at, it's not just an idea that I have. It's not just kind of a one-off invention, but it's
Right.
now an idea for a business as opposed to for a specific innovation, which is a subtle difference, but a very important one when you're looking at the long-term viability of some of these companies. So I certainly hope we see that trend continue. And I think we can come out of this with a group of companies who already have that sort of real world in the back of their mind. It's going to ultimately put us in a very strong position. I want to switch gears a little bit and talk about some of the big opportunities that you see coming. Obviously, as I said, we're halfway through the year right now. What do you think are going to be some of those big opportunities for companies in the second half of 2024 or even into 2025?
Yeah, I think there's a few areas that really excite me, and honestly, I think there's some opportunity. The opposite of the momentum investing is you're looking at areas that are being ignored, and where there really is no reason to ignore them. A big area is insurtech, and multiples are down in the public market, and people have essentially started ignoring it. It doesn't make sense because insurance is a core piece of how we function as a society, and there are these traditional players that are ripe for disruption, or to be enhanced with technology. And now these businesses that people who are taking a look at, some insurtechs don't make sense. Some of them have unit economics that are incredible, technology that's incredible, and you have, with the shift in inflation, that has had this lag on insurance and what they're being able to charge based on each of the state regulations. That's starting to catch up. Insurers are starting to come back into the game, which is propping up this wave of innovation. So I think insurtech is certainly one area that is very much alive and excites me. At the same time, others that are dependent on capital markets, which are starting to open up more and more, which is, a lot of lenders, and in some ways also actually back to insurtech of reinsurers. These are some of the building blocks that are needed to open up innovation. So I think innovation, which has in some ways been stalled by some of these financial challenges, as we start to kind of peak back, inflation being persistently closer to where we need it, interest rates getting to a better point, capital markets opening back up, venture dollars opening back up, we're starting to see the opportunity for big growth in some of these areas that have really been stalled and ignored by investors.
Yeah, well, I certainly hope you're right at any rate. I think that there's obviously a lot of work to be done around insurance. And also, I think, if you look back on the history of certainly Finovate and my experience within fintech, a lot of the companies that I've seen really go on to do great things are the ones who jump right in and target those really painful parts of the process. And look at something and say, what's the worst thing that a customer has to experience? Can I make that better? And certainly there's a lot of those types of interactions that are ripe for disruption, as they say, in the insurance space. But it's certainly not limited to that as well. We saw a company at Finovate Spring win Best of Show in kind of the debt collection space, which is, again, it's not super positive thing that people spend a lot of time thinking about, but there's a huge opportunity there. So I think, there's a real appetite in the industry for these kinds of technologies, and I certainly hope that we see more of them. We're almost at the end of our time here, but I want to end with some advice for all of the fintech founders or fintech executives who are listening. What's the one thing you wish you could tell all the fintechs to do that they're not currently doing, whether it's in terms of, how they form their business, how they engage with venture capitalists? What's kind of the big mistake that you would wish everybody could stop making?
Yeah. I will try to keep it to one thing. It kind of all blends together. I'll start with one of my favorite questions, which is I like to ask a founder, what keeps you up at night? It's really a question of self-awareness and humility, ability to take a look at the big picture of your business, take advice, know what you don't know, and really figure that out. That goes hand in hand with what it's really not okay to not know. And that is, you need to have great data. You need to understand your customer journey. You need to understand where they're coming from, what their life situation is, what the business situation is if you're selling B2B. And where there's drop off, how you can really continue to evolve and enhance, and where there's opportunity for improvement in your funnel. You can't fly blind and wonder why things aren't happening. You need to know, hey, there's a longer sales cycle here, and I need to prepare for that. You need to know that there's this critical conversion event that we need to explain why we need your social security number, why we need this information. Really understanding that full journey and looking critically at it, having that great data goes hand in hand with self-awareness, which is really being able to sit across from an investor and say, we have something special. This is our team. This is our vision. Here are our challenges, and here's what we're doing about those challenges. And I always say, your job as a founder is to tell me what to believe. And my job as an investor is to decide whether or not I believe it. And that's really what it comes down to. And if you can, with conviction, with data and confidence, tell me what you have, where it's going. And understandably, these companies aren't bulletproof. They're early stage companies. So understand where you are, acknowledge that, and give us the confidence that any challenge that you face, both in the short term and the long term, you're going to be able to overcome.
Yeah, I love that. So many pieces to unpack there. I hope everybody who's on that fintech side of the equation who's listening was taking some notes. If not, go and replay that last 90 seconds, because so much valuable insight in there. I'm afraid that does take us to the end of our time for today. But Alex, it's been a real pleasure chatting. Thank you so much for taking the time and sharing some of your insights with us. We really appreciate it.
Thanks so much for having me. It was a pleasure.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.